when I was working on Wall Street, you're working for the man, the corporation, right? What I found intriguing was, no, I'm going to go work for people in a giving capacity. And that was very endearing.
All the fear sets in, and that's what people are focused on. And you're like, I'm going to make it. I'm going to reinvent myself. What am I going to do? I have no idea.
I think a lot of people in this country take things for granted, the freedom and all the opportunities that we all have.
There's this harsh reality that you really want to understand, but it's like, now that I understand where I am, I can actually change my future.
Each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
So this is John Smallwood. I am back on Money Isn't, and today I have a really special guest, Edward Bao. Welcome.
Hello.
Edward Bao, CFP AIF.
Yes.
Okay, accredited investment fiduciary.
Correct.
Okay. And Ed is been with the firm for over 16 years now, Smallwood Wealth.
Correct.
Before that, you spent 25 years on Wall Street?
Something like that.
25, 26?
I'd have to do the math. 2008. It's, yeah, well, actually, if you count my, we'll call it internships through high school and college, it's almost like 30.
So you basically grew up on the floor.
Yes.
So if you visualize this for a second, Ed was one of those guys with the blue coats that you see stock footage now on CNBC and all those places.
The History Channel.
Trading places, etc. Trade, buy.
Yeah.
You were one of those guys.
Yes.
Okay. So you joined the firm. You were actually a client of the firm.
Yes, we had just started working together within that year, I believe.
And then, as we all know, the firms, the floor started to go electronic and jobs became scarce.
Yes, it was. They needed the human intervention less and less. So, yeah, we used to kind of joke midday, like, "Hey, what are you going to do after this?"
Because I remember I remember you saying, like, you were busy at the open, then you sat around, and then you were really busy for the last 30 minutes, if that.
Yes, because the algorithms at that time could not capture the opening prices or the closing prices. And then there's a nuance on the floor that at 20 to 4, they give you the imbalance that is forming for the close of the day. So there might be, people like to put market on close orders in because they're trying to average a price out all day. So They need to capture everything. So they would start putting these orders in. And what the exchange did to reduce volatility was at 20 to 4, they would announce, for example, IBM has an imbalance of 800,000 to buy on the bell. When they announce that, you have 10 minutes to put in offsetting orders. So you can put in sell side.
Okay.
They don't want you to put more buys.
Because they need to fill the 800.
But again, it was about volatility, right? Like they were trying to be transparent and basically, because all of a sudden, if people didn't know that and the stock closed up a half a point because there was this big imbalance, now people are upset because
the average price is all messed up.
Right, right, that, and I maybe I would have sold more stock too. You can look both sides, right? So, and then at 10 of
the half a point would make a difference.
Yeah, maybe. You were willing to sell at 110 and a half, and it was trading at 110, right? So, and then at 10 to 4, they basically would re-announce the imbalance.
200,000 shares,
or
whatever.
No, it probably came in. They say, okay, we're paired off on 500,000, and we still have 300,000 to buy.
Right
now, they don't really allow. I don't think, from my memory, I don't think they allowed any more orders at that point. But now you get the human intervention in there. And I could stand there and participate on the close.
Smallwood Wealth Management is the lead sponsor of this podcast. You have an opportunity to have a free, no obligation conversation with one of our qualified advisors. Go to smallwoodwealth.com, schedule a call, or call us at 800-797-1000 and get on our calendars.
So you still had that. And then, I would be working orders going into the bell as well because They just wanted, again, that average price, the VWAP, they used to call it,
Right,
volume,
and
volume
just hit the
weighted.
bell and
Yeah.
boom, and then you're done.
Correct. Yes, it was the good part about the job was you were kind of done at the end of the day. The difficult part of the job was, especially not at that time, but years prior to that, they used to have T+3 for comparison purposes. So if I did a trade
plus 3 days, by the way. T+3.
T+3, trade +3. So like I do a trade on Monday, we basically have 3 days to make a comparison. If there was an issue with the trade, we'll think about what the price maybe was on Monday versus 3 days later. If I have an issue where I underbought something or misheard something from somebody when I compared, I got to go back out 3 days later and buy it. If the stock went higher, I've got an error because I owe the client that price for Monday. So,
Right, if stock went lower.
so the good thing was electronics and technology sped up the comparison process. So we used to know within probably minutes towards the end there, when it was 2008 was when I left, that you knew you had a problem. Well, and to back up a little bit, if we were working a very, very large order, we would send our phone clerks out to the people I traded with, because you knew where they resided in the room, and they would go, Ed knows buying this at this price, and we would just self-confirm anyway. We wouldn't even, so
naturally, you're on the investment committee here at Smallwood Wealth. You've been part of the executive team. You've been, you entered this business with a lot of stock market knowledge.
Yep.
But you didn't have a lot of financial planning or wealth management knowledge.
Nope.
All right. So we're going to dive into that as we go. But I think what's really interesting is you're on the podcast. What does money isn't mean to you?
Good question. When I first heard money isn't, I started thinking, it took a little bit. I was kind of vacillating with it, and I just thought, what money isn't is everything I don't think about money. It was like, what does money represent to me? And money isn't is, well, what doesn't it represent? And
Correct.
And I still don't. I'm still trying to grapple with it, what that actually means in my own head. But
Right.
There's value to money. Obviously, we do things with our money. It's a commodity, right? So if I didn't have the money, or have a lack of money, does that create a scarcity or something else?
I mean, really simple. I mean, JP Smallwood basically used to say money isn't everything, but without it, you can't get a date.
Money isn't everything.
Right?
Yeah,
right. So you start to see these things, these events of money and the people, the way they have their thought patterns and their perception wrapped around money, that money, money is the root of all evil. Money is this, money isn't that. And there's like such questions about what money is. Like, people perceive, hey, I'm going to have, I'm going to get to the $1 million mark or the $10 million mark or the $50 or $100 million mark, and everything's going to be fine because now I have money. That doesn't solve any of your problems. You took the same problem. If you didn't fix the problems earlier, you'll have the same problems at 100 million that you had at $1 million.
Absolutely. And I remember when I was just started up, when I really worked, when I got out of college and I was working on the street, and I'm going to give you a different perspective. Like,
yeah.
I remember, I think it was my brother, was making like $100,000 or something.
If
like
I
that.
just get to 100,000,
Like this is like 1986. So, let's put
a lot of money.
Time value of money, right?
Yeah,
right?
yeah.
So I'm like, and I thought to myself, I think I came out of college making about $21,000.
Yeah.
And I said, if I can get to that $100,000, I'm set.
And what happened when you got there?
I needed to go north because what I didn't realize at the time, because I was young, was, our lifestyle increases, or now I had maybe a smaller house and now I wanted a bigger house, or I'm buying more expensive cars. But thing you want more.
I forget if it's Gresham's. Is it Gresham's law that expenses rise to income?
Mm-hmm.
I think that's that law. Right?
That's yeah, exactly.
Right?
So you're like, yeah, I joke that you know me, I always joke about my memory. I actually have pretty good memory, but it has its moments. But I say, that has stuck in my mind since literally like 1986, 88.
And everybody comes in like, people say, well, when I have money, I'm going to come work with you. How many times have you heard that?
Yeah, right.
And I'm like, you're living in scarcity. You have nothing right now.
Right.
If you don't solve your problems right now, when you have that perceived 100K, like, right, let's just use that as an example, you're still not going to have any money because the same problems are going to be following you.
And when you said that, what I ran through my mind was, okay, when you get the money, but what are you doing to get there? Because we always talk about strategy, right? The secret sauce is the strategy. The pieces are just the byproduct of the strategy, right?
Right.
So, like, okay, do you have your strategy set up right? First of all, maximize what you're doing to get to the perceived wealth or amount, right? And so, are you kind of shooting yourself in the foot waiting?
Right.
So,
because if you don't take action, you're not going to have it. Like, you're gonna get, like, if you're 25 and you can't save money, and then you get married, and now you're 35 and you got kids, you still can't save money. And then you get to 55 and you still can't save money. And then you get to 65, you're like, what happened? And now you have to have that conversation. We're making 300, but we're going to live on 30 in retirement.
Right.
Or 65,000 for my Social Security.
right.
Thank God for Social Security.
Right.
Like, so money, like what I wanted to do in the podcast and what I wanted to do in this process was everybody has different perceptions about what money is and what money isn't. Right. And it's those perceptions that dictate how they approach their financial strategies. And I think what's interesting is when you join the firm, and I mean, you were 42. How old were you?
2000.
Do the math, because I can't do the math. I'm just kidding.
Well, wait, I'm going to back into it, right? It's 24 back to 2008, right?
Yeah.
So what are we talking, 4 and
16,
then another 12, 16 years ago. 16 years ago.
44.
Yeah, 44.
Okay, so my math
And you
was-
remember the conversation we had?
Yeah, in the diner.
No. You don't remember this.
What was the conversation?
It was the day I got the tap on the shoulder.
Oh, on the phone.
Yeah, you called me.
Yes.
And I think we were going to talk about travel baseball.
Yeah.
And I think I said to you, I go, that day I was talking about, it came today.
It came.
And your reaction was, I'm so sorry to hear that. And my reaction was,
You're free.
there's nothing to be sorry about. I did that for 20 plus years. I'll figure out what I'm going to do 20 plus years. And that's
the key right there. I want to focus right there for a second because people can perceive that as, I'm so sorry. Because you're almost programmed to say, I'm so sorry that you lost your job.
Right. Technically, we all.
But you're now free to go do what the hell you want to do.
We're perceived. Well, think about it. I've built up that career. That's the problem.
Oh my God! Here I am, 44 years old, and I'm 16 years from 20 years from retirement. And am I going to be able to reinvent myself? Am I going to be all the fear sets in, and that's what people are focused on. And you're like, I'm going to make it. I'm gonna reinvent myself. What am I gonna do? I have no idea. And
I think I'm programmed. So you start really on kind of unpacking this and go, there was a belief system that was put into me by my father that basically, and I joke about this even in my own house right now. I go, I try not to wallow in. We don't wallow in things. Like a perfect example was, my son Edward got diagnosed with diabetes. I called Dad. And I said, "Oh, we got some news today. This happened to Ed." And his first thing he said to me was, "Okay, what do we have to do next?" It wasn't. We're not going to wallow in it. We have to go to action and solve the problem because that's what he kind of instilled in me.
Now he grew up in Cuba.
Yep.
Tell that story for a second. There was a turning point where I believe they owned a restaurant.
Yeah, it was almost like a little bit of a club thing and this and that. And they had like dignitaries that came in to go to their club.
It was a pretty successful place.
Yeah, I think my grandfather, from what I understand, was kind of like a little bit of an entrepreneur, and so where he lived in Cuba, there was a factory called the United Fruit Company was there.
Okay.
My grandfather was the head of transportation for that company. and they built the town of Preston, Cuba for the employees.
So basically, okay, like everything here in the United States.
Right. So like you had the plant and it kind of reminds me of like Hershey Park. Like
Correct.
Hershey,
The whole town built.
Disney.
Right.
Yeah, he built Hershey
Orlando.
Park for the employees to have someplace to go on weekends because they're in the middle of nowhere because they need the milk, you know? So, but, when Dad was doing some other jobs there, and like even Grandpa, if the country of Cuba had a rail system and it went down, they would pull him in to get it all fixed because he was really good at this whole rail system thing.
That's
right?
why you can fix stuff.
Yeah, and then they had this little business on the side, and then Dad is the youngest of 4, and he went in. It was, I guess, is where I got kind of my accounting mind a little bit. Is he came in and would run all the books and all the inventory and
At the restaurant.
at the
club,
yeah. So, but then my grandfather made a deal to get my father and his older brother over to the United States for education. So they came here for, we'll call it high school, and then some sort of, higher education, college or business college.
Right.
So he did that, and then.
But there was an event that happened. One day things were really good. The next day things were not good.
Yeah. So, right. The way he kind of says it was, you had Fidel Castro in the mountains, as the rebels, they didn't like the current regime, and what was interesting about the story was, okay, so they basically get the current regime gets ousted, he gets put into power, but everything he was saying before that resonated with the people, but when he got into power, it all changed.
Really?
It all changed. Yeah. So that's when they kind of started figuring out they had to get out.
And I remember a conversation with your dad, and he was talking about, it was sort of like this, and he put it and he framed it, because this all goes back to money, right? If you had 100,000 in the bank and Tony, the video guy here, had 1,000 and I had 8,000, the next day we all had 10,000.
Yeah.
The money got just rerouted, and everybody now had the same amount of money overnight.
And that story was told by his friend, one of our clients, who came in and was a little older, and he was a doctor.
Yeah.
And they wouldn't let him out of the country.
Correct, because it was
they needed him, and he was the one who said, "Yeah, one day we all got up, and whatever he had in the bank, it was $10,000.
Yeah,
whether it was $1 or $1 million.
Can you imagine that happening to you, and like having that resilience? Like you're just basically, you have no more. Everything that you work for was basically dispersed,
and there's nobody to complain to.
And if you complain, you're not here.
That's the point. Like that was, when you said it, I'm sitting here thinking, like, I think a lot of people in this country take things for granted, of the freedom and all the things the opportunities that we all have.
Right.
Because and my dad loves this country. Like I even said to him, when they started allowing people to travel back to Cuba.
And he's what, 94 or 5?
93. 94 this May.
Yeah.
So I thought, we have some old kind of not aerial photos, but almost like taken from like a water tower of the town of Preston. They were like these big black and white things. And I always thought, like, wouldn't you want to go back there? And he said, no.
No, it's not the same. It's not what it was.
It's not what it was. He also understood that, if you go back there, if we go there and we spend our American dollars, we're fueling the wrong people. And so he's never going to do that.
And if you look at it, this is probably going to be one of those videos and YouTube things that we can't promote because we're talking about political things at the moment here, right? But who cares? But the reality is...
But it's reality.
It's reality. And if you look at, that was 60 years ago, right? That he left.
1957.
Yeah, what is that? That's 57, so I'm 56. That's
43.
That's 67 years ago that happened. Look at the state of the economy. I mean, Cuba was vibrant.
Yeah.
I remember my in-laws are like, we went to Cuba on our honeymoon, and then boom, it was over. Yeah. It was like the greatest place to go, and like the property and the views.
They actually had a lot of great
beaches.
innovation. Like medically, they were I think leading in a lot of areas way back. You know? And it was a shame. Yeah, I just feel bad for the people.
Oh, the people have been. I mean, that thing we went to recently, that event. I forget the name of the artist that we went to.
Carlos Luna.
Carlos Luna.
Yep.
That was an incredible story of his journey and the art that he was doing. But like he was doing the art there, but he couldn't do anything with the art.
No.
And somehow he's here now. And he's not going back.
Oh, no,
he's not going back.
No.
But I think like it's those things that shape you, because what your dad and what that client said to us was that money wasn't the thing. We still had our family, we still had everything, but we realized that we were no longer in control of our outcomes.
Yeah.
Right. And okay, you're here, and your father's story I think was really interesting because he talked about working in the mailroom and then learning the business. He learned because he was a Cuban and
oh my God,
an immigrant, and it's like, well, you're smart, you're college educated, but you're going to work in the mailroom.
Well, right, yeah, he, that story. A lot of times I can't even say because I start getting welled up by it because it's like some big shoes to fill, right? Like right. So that man, moved to New York City, rented a room in Midtown Manhattan, and would walk down Broadway every day looking for a job. Yeah. And then got a break in a stock brokerage firm down in the Wall Street area. And then this is where I, wow, you sit back and like, you couldn't even fathom this.
All the odds are against him.
Well, but he didn't look at it that way.
Correct.
Because, and I'll back up to when he came back he went to a business college up in Massachusetts, and when he went back to Cuba, he was whatever he was doing, working or whatever at the time, and then he met my mom, and my grandfather looked at him and said, "What are you going to do? What are you doing?" He goes, "Well, I don't know. I want to marry Martha," and he's like, "Yeah, but what are you doing here?" He goes, "All the opportunities over there."
Correct.
And so my dad said, "Okay, what I think I'm going to do is I'm going to go
get my opportunities,
get situated a little bit, and I'll come back for mom. Not mom yet, but she, come and get her."
For Martha.
So funny how you think about these things. And my grandfather went to bed that night, got up the next morning, and he told my father, he goes, "No, you're taking her with you
because you're never coming back."
Right? He knew like if he went, he probably wouldn't be back. And I guess they liked mom and everything. But I remember when I heard the story and I told you, right? Because my mom was 18 years old.
Yes. Didn't
get to see her parents. That was 1957.
Yep.
Her parents didn't get to the United States till 1980.
Wow.
And I said to you, can you imagine?
This is 23 years.
Yeah. Can you imagine, your daughter, John has a daughter.
Oh, yeah.
And she gets married at 18 years old, and you're not going to see her for the next 23 years.
Yeah, she'll be in her mid-40s. Yeah, that's going to be fun. Yeah.
I mean, I don't think you could even fathom that happening, right? So,
and you can't even really communicate. You can't instant message.
I don't know if there's even letters.
I don't think you send letters. I don't think they're U.S. letter.
You're right.
Or open it up. Is there money in it?
You're right. They're vetting it. So
no money. Throw it in the circular file.
So here he is, working in that stock brokerage firm. Doesn't really know the business, but he would wait for everybody to leave and go into all these different back office departments that a brokerage house has, open up the books, pull out the tickets, and learn everybody's job. And
which is an opportunity that probably would not be even possible today.
No, but that's,
But here's the incredible thing. Not only did he learn everybody's job, he actually created a firm and built up his own firm.
Yeah. He
and ended up selling it.
Well, so he got himself into basically the management position that oversees all those departments that he learned.
Yeah, from the mailroom, in essence.
Basically from the mailroom.
Yeah.
And then that firm got bought by another firm, and he probably should have made a managing partner at that point, but they didn't. And when he got over there, they finally did make him a managing partner, and he was basically number two man in that business. The original head guy bought them as still the head guy.
Right.
But
he was number two.
He was number two. But if you talk to people on the street, other executives from other companies said the reason why they did business was because of Dad.
Right.
That he was the conduit for and then that company went public, and that's that's a great it's
wonderful
a success story.
It's what everybody dreams of.
Absolutely.
Right? It's what everybody dreams of. And that, like, when you weave his story, your family's story, your story, the perseverance that you had when you stopped working. And I remember you and I went and had, lunch at the diner. The beautiful Americana diner in downtown Shrewsbury, New Jersey.
That isn't a plug, but
I love the silver dollar pancakes there. I think they're fantastic.
Well,
and their French toast.
And some people actually say it's one of the best diners
in the state.
So I guess it is a plug.
Yeah. And I think my father and I, my mother, I think you, we ended up I think we had lunch there for like 10 years in a row, like pretty much every day. Like, it was crazy. But I remember sitting and you're like, I'm like, what are you going to do? And you're like, I don't know. I'm like, why don't you come work with us? You got a financial mind. We need an advisor.
Yeah.
You're like, let me think about that. And then you ended up coming in.
You know what was really interesting, and I reflect back on this, and it only reason why I'm going to say this is because I think over the last like 5 years, as I've grown as an individual, the perception you have of yourself versus the perception people have of you. When I was leaving the floor, and there was like 36 floor brokers.
It was like a funeral. For everybody.
Well, like, let's say they were doing it in tranches, like 5 guys are gone,
I'm okay.
Right. Yeah. I made it.
I'm
right?
okay.
And of course the guys that are staying, they're sad that you're going and all that.
But they're happy that they're there.
They're happy. They still have their job. Yes.
Let's be real.
It was a lucrative job, so it wasn't bad,
Yeah.
But they all, and I don't want to sound boastful or anything like that. But what the moment I had, I was like, everybody kept saying to me, "You're going to be fine.
Right.
You're going to be fine." And I'm like, what the hell do you see in me that I don't see in me?
Right, because I'm not feeling that way. I'm not feeling that way in the moment.
The guy next to me who got let go too, they're not saying it to him.
Right. That guy's screwed.
And what's really, and however it played out, and I feel bad because a lot of folks that left those jobs didn't really transition well.
No, they didn't.
And
they never really, a lot of guys were, and that's the mindset thing. That's the money isn't like, they weren't able to replicate their success.
Right. And like I looked at it as, hey, I came out of college with an accounting degree and this and that. Some folks, didn't go to college. I'm not saying that was good or bad. It was just
is.
It just is. Some really worked their way up like my dad did. They worked up. There was messengers on the floor, and you proved your worth, and people liked you, and then they hired you, and you worked your way up that way too. So, and there's a lot to say. I have one fellow that worked with me. Have the utmost respect for this fellow. Is like. And he wasn't a street guy out of Brooklyn, and it was just.
But he had that intuitiveness. He understood
exactly
what he was doing. He was able to adapt, and you see
exactly
that in the different personas. And it's like, we talk about, and just to dovetail on what you were talking about, perception, right? The success in any business that you are in comes down to the quality of your work, the quantity of people you share it with, and how people perceive you.
Yes.
You have no control over how people perceive you, but it doesn't hurt when somebody looks at you and goes, "You're going to be fine." And they perceive you like, okay, that gives you a little bit of confidence as opposed to you're effed. You're not going to be able to do this. Right. So it's like, but that perception really needs to be internal. Right. So you're out, you come here, you learn pretty much what you didn't know. Like you thought you knew, oh, this is money. It's going to be easy. And you realize
no,
it was
believe it or
different.
not, I didn't think it was going to be easy. I just said, I don't think I put a label on it or put any,
Right.
I just go, what I knew I didn't want to do. And I think I told you this ago, I'm not going to make cold calls all day to people at 44 years old.
Right.
I just didn't, that's not me. I don't like doing that.
Right.
But I said,
it's not how the business is really built anyway.
When we were working with the planning software, I go, this makes sense to me. This is value added for people.
Correct.
This is a story, or
that you could share.
I could share, right. and here's the funny part too is when you work when I was working on Wall Street, you know, you're working for the man, the corporation, right? What I found intriguing was, no, I'm going to go work for people in a giving capacity, and that was very endearing.
And
to
in
me.
return, you're going to get rewards because you did good work and you added value to people's lives.
Exactly, and that to me was really interesting to go to that place from where I was, right? And I think everybody likes to help people. It makes you feel good. You know, I think some people more than others, but everybody likes to help.
Yeah.
So I was curious to see how that would play out.
I think this is one of those businesses where, you know, there's two ways to be in this business. There's somebody that's pushing product or somebody that's solving problems, right? Creating solutions to the problems or perceived problems that people have, right? Those that came into the business with a product mindset that left the floor were out of the business in 24 months.
Yes.
Or less,
Yeah.
right? Those that entered into some kind of value add position, I believe most of them are still here.
Yeah.
Right. And I think in my perception of this reinvention of you coming out at 44 and saying, I'm going to dive into this, right? And if you were to look back on the timeline and say, okay, 17, 18, I do some interns, I go to college, I go to Seton Hall, I graduate with an accounting degree. I don't become an accountant because I hate accounting. I went to Bentley. I was an accounting major, and I'm like, my dad's like, I don't understand why you're doing that. I'm going to be an accountant. He goes, okay. And then I was like, I remember my first accounting class. I'm like, I got to change my major. And he's like, I was waiting for that to happen.
I'm going to tell you, I think back on this and I'm like, oh my God, what you learn over time. I actually was young. I was 17 when I went to college. I have a November birth date.
Right.
So I don't turn 18 till almost,
Today you would have been a year back. You would have been the oldest kid in class as opposed to the youngest.
Right. And I'm kind of young for my grade, right? And,
you are.
And I've had a chip on my shoulder. I always had something to prove back then.
Because you were the youngest kid.
Maybe, I don't know. It reflected itself in all parts of my life that I was going to make a point everywhere I went. And I went into, this is how silly, I'm not going to say stupid, it's how silly this is going to sound, is I walked into Seton Hall, I think it was one of two accredited business colleges in New Jersey at the time.
Yep.
And I said, what's the hardest business major you have? And they said, accounting. I go, I'm going to do that because I'm going to show you who I am.
There you go.
So that's how I ended up in accounting. I knew I was a numbers guy. I didn't like English in high school. It's really funny how as I've been here, staff would come to me with their emails and show me and go, can you do this? I'm like, yeah, I would change this. And it's like, they're like, you're such a wordsmith. I'm like, I'm terrible at English.
Well, again, that's perception. That's perception, right? That's perception.
I would laugh when they did that.
But looking back on the timeline,
yep.
What do you think the single most important investment that you made in yourself was over this last 16 or 50,
wow,
50 years?
That's a good question.
Or 40 years of work. And why?
Well, there's probably a couple things. Right away, what comes to me is taking on the challenge of being a certified financial planner.
Yeah. Not an easy course.
Not easy. I think I'm maybe like 47 now. It was a few years.
You're 2-3 years in the business.
It was 2 or 3 years in the business. Like I said to you, I think I'm going to go get my CFP. You said, why? And I said,
because you have it.
Well, I thought of succession planning too, right?
Yeah.
John, you're a CFP. I should be a CFP. God forbid anything happened to you. The clients would feel...
And CFP is a certified financial planner. Just for the record.
I wanted to elevate my breadth in the business, my breadth of knowledge in the business. So I'm like, and it's like you said, it was a commitment. It was a 2-year commitment to do that. And I went at it hard. Hard
study, lots of study.
Yeah.
Lots of classes.
I remember I was taking, it's a 2-day exam. And I had just spent basically 2 months every weekend shuttered in prepping for that exam after taking a 15, 16-month course, right? And I told my wife it was January, February, because the test was in March, and I said, "Don't even. I'm only around on Saturday night. Like
That's it.
that. Don't expect me to do things.
5 o'clock on.
Yeah, right. Like we'll go out and do something, but don't expect me to be around." And we followed Dr. Elko, and he made an impression on me when he
Dr. Kevin Elko, if you want to search him.
So, and I was teaching the boys this. I'm like, there's two types of pain in the world: the pain of discipline and the pain of regret. One is getting through your business, taking care of it. The other one you have to live with because you didn't take care of the first one, right? So I said to myself, I am going to go all in, and if I pass, great. If I don't have a regret because I put 110% into it.
Right.
So, but I was sitting getting back to the story, I was sitting there and I'm listening to these two fellows talk behind me who are younger than me, probably like, let's say in their 30s. And they're talking like, "Hey, have you been studying for this thing?" "Well, yeah, I've been, I'm studying a little bit here and there." And I'm like, and I'm in my mind, I'm going, "Oh my God," like,
how are you going to pass?
Yeah, like, whatever. And I think the pass rate is somewhere in the 40s for the exam. And
So I think it's lower, actually.
so, and I know our metric, there was about, let's say there's 20 people in our CFP class. There were 4 of us that passed.
Yeah.
So I said, well, I was going
That's
to
probably the metric on the first try.
Yeah, on the first try. Yeah. So, and I just laughed and I'm like,
I remember I took it. It used to take the 6, prior to me taking it, it was 6 modules, and you took a test and moved to the next module. I was the first year where it's like, oh no, you're gonna take all 6 at the same time, one big exam. And there was like 40 people in my class up at Fairleigh Dickinson, and 2 of us passed. 2 of us passed. Yeah. And I was like, oh, thank God. Thank God I don't have to do it anymore.
Because I know if the exam is 3 times a year, it's March, July, and November. I know from doing other tests that if I have to restudy for July, it's not happening.
That momentum, all the time, the energy. But it's like, so you invest in that, and that compounds the roots that you have, because you have knowledge about money, you have knowledge about how markets work, you have knowledge, you have your own personal investments, you have houses, you have mortgages.
Personal experience, sure.
At this point, so you really understand it. And then like you work in the business here for 3-4 years, and then you jump into the CFP, and the CFP connects more dots and brings more of that clarity, and then all the other things that we do all of a sudden comes together, and it's like, oh, there's a whole different picture, because there's conventional wisdom and then there's reality, right? And conventional wisdom is not necessarily something that is really work. It doesn't work.
Well, I was just thinking, we were saying there, and you're right, the elevation, getting more knowledge and increasing, my profession, my skills. But there was something that came over from Wall Street that I think is important when you're dealing with clients, is that not only do you have to be knowledgeable about the details of the plan, but it's the behavioral science of dealing with people and helping them through certain situations. The CFP can't teach you that.
Right.
So
I always joke I should have not been an economics and finance major. I should have been a psychology major.
Oh, right.
This is not a financial, full disclaimer, we are certified financial planners. That's what we do. But I've had many, many people during a thing like, this is better than marriage counseling. I'm like, yeah, how come I can't translate to my own house?
Well, and you're talking about what money isn't, right?
Right.
And the embedded things that happened as we grew up and our perceptions of money.
The programs.
Money isn't everything. Have we ever heard that one, right? Yeah. Money isn't everything. But what does that mean? And so that's all interwoven into the client and how they perceive their plan and how they're going about their goals. So it is an integral part of, yes, we have a strategy or we have concept or what's the best way to do things. Absolutely. But how do you get them to understand it and work through some of the things that maybe is counterintuitive to them? That's another side of this business. It's a craft. It's a skill.
It really is, because I think one of the things that I learned early on is people. There's a present situation. There's a plan that they have, and they have a job, they have family, they have things that are going in motion, and there's things in there that are really good, and there's things that are mediocre, and there's things that, geez, they're just wide open, gaps. But people's perception of what they have versus what they actually have are two different things. And people will walk in feeling really negative and walk out feeling very positive.
Correct.
Not that you can do this for everybody. Some people should leave feeling negative, right? Because they need to get their shit together, right? But it's like...
And I had to learn that a little bit as my progression through being an advisor was, I felt like I don't like seeing people sad, right? But there's sometimes you have to tell them something.
Tough love.
It is tough love. And I had to get there, from when I was younger advisor to where I am now. I understand better now, like I'm doing you a disservice if I don't really tell it to you straight sometimes,
right. Because the programming is, a lot of people walk in and you can hear in their voice, like, I don't have any money. I'm never going to have any money. That's for somebody else. My retirement's going to be short. When I get to be 62 years old, I'm not going to be able to travel the way. I'm like, whoa, what are you talking about? Like that's how you look at your money versus what it is. Is completely different, right? And you can look at your money with like rose-colored glasses and have, not the right outlook either. So there's this reality, this harsh reality that you really want to understand, but it's like, well, now that I understand where I am, I can actually change my future by taking small actions, right? So like, it's not about really the investments and the how and the what and the why that we put it together. And it's not really even about the organization of how we organize it. How we organize it does reduce taxes and does reduce risk and does reduce fees and costs and does help people save more money. And it does basically put more benefits and more protection around that wealth. And it does give you the ability to have more retirement income and pass more to your loved ones. But that's not what that's about. It's about getting people to be free with their money. To actually don't let the money control them, but actually let them be in control of their money and their money decisions and their budgets and the way they approach it. And that's right. To me, 35 years of doing this, it is the evolving side of the business is no longer about, hey, I got a great mutual fund or I got a great stock or this, because that doesn't really make a difference. I mean, there are some shining bullets where, like, if you got really smart and you bought some really smart stuff, you did very, very well. But it's those same forces that will take it away, right? So, we've all seen it. You should just buy blah, blah, blah. And everybody jumps in and buys blah, blah, blah. And then blah, blah, blah goes from $70 a share to $2.
Right, and that conventional thinking that's out there because of marketing and other forces.
Fabulous marketing.
Right? And they make you feel good about doing certain things, but it's limiting. And I constantly talk about the flexibility, and you got to build flexibility and options in the plan because we don't know what's going to be ahead.
All right.
Do we have to leave Cuba? We got to
get off the island. The island's no longer good.
That's what I'm saying. Like, who would did you think that 10 years before? Maybe not. We don't know what's going to happen.
It's only going to be a year or two, and we'll get it back on track. No, it's 65 years later.
Right.
It's still going on.
But so, that's what I think. What's unique about what we do with our clients, and here's the disclosure: every advisor thinks they're unique, but I really do. I truly, wholeheartedly believe this. That,
right. And if the advisor doesn't think he's unique, you probably shouldn't work with him.
Well, right. If you don't think he's special, that's probably very good too. Never thought of it that way, but yeah, you're right. But what you were just saying, like, there's ingredients, right? But what's the recipe for right now that's going to work? What's the right?
And then your unique mix of family and pressures from the family and positive and negative, right?
Right.
Like, what is like
One size fits all does not
how
fit
do you
all.
approach your wealth, and like how do you perceive market volatility? Like,
Are you even perceiving it? Do you even understand it?
right?
Right. Like, and are you letting that control your outcome?
Yeah.
Well, then
average rates of return, like average rates of return get people in a lot of trouble because it's like, and this is something that I think when you learn this, you're like, what? Like it was so average versus actual.
Yeah.
Or volatility adjusted.
One of my favorite things to do in front of clients, and it's so simple.
Explain it to me. Teach me.
We do it a little bit differently, but we get to the same place.
Yeah, teach me.
So I get up at a whiteboard and do it because the visual
Makes everything.
And
I make the client write it.
that's good. I guess I like acting it out a little bit, you know? So I usually just put up there and I go, okay, you came to me with you didn't like your old advisor for whatever reason. You came to me and you wanted me to manage your money. And we go, okay, first year we have a $100,000 account and I am the best advisor you ever met. I made 100% on that account. And okay, so 100,000 at 100% equals 200,000. I write that across the board. And then I go, okay, year 2, we start off with the 200, right? And then we get them to nod their heads, you know, and they say, yep. Well, I'm not so good this year. We're down negative 50%. So negative 50% of 200, make them answer. They're $100,000. So, okay, how much did you make? They're like, nothing.
Zero.
I said, not counting dividends or fees or anything like that.
And taxes.
Right, all that. Let's just keep it simple. You got 0% return, right? I said, yeah. I said, well, you know.
But then you look at my marketing.
Right. Like the investment company that we invested in will tell you they, you know, average 25%. And they look at me. I go, okay, how are we going to get there? 100, we positive 100, minus 50, still positive 50, right? They're like, oh yeah. And some people go, no, I'm up 50. They'll say 50%. I'm like, no, it's 2 years, divide by 2. You made 25% on average.
On average.
Right. And on your, you know, if you do this math, 25% compounded for 2 years on $100,000, about, I think it's $156,000. And you're looking at me, I'm like, what's your account have? $100,000. Yeah. And I go, that's the problem.
Money isn't math.
Money and math are not the same.
Money is not math.
And they get it really, really quick. And I said, this is what we have to be.
So why is money not math?
Because it's a commodity. It's subject to other forces.
Erosion principles.
Yes, exactly.
Such as market volatility.
Market volatility.
Taxes. Transaction costs.
Inflation.
Fees. Right? And this is what people don't get. It's like the simplest thing, the most conventional wisdom is, you just take your money and you put it in a 12% mutual fund. Well, what was the ride to get there? So what was the and the ride is different for everybody because it depends upon how you invested. Lump sum versus dollar cost averaging. You know, did you invest on the highest day? Did you invest on the lowest day? And the returns are different based upon how you withdraw money, how you put money in. It's different. But the reality is you're led to believe that you get averages. Even this thing called Monte Carlo simulation.
Yeah.
So what does Monte Carlo simulation do? You've seen it. If you're listening to this and you know what we're talking about, you're still here. Monte Carlo simulation takes 1,000+ iterations of the portfolio that you're invested in, and it basically says your expected rate of return is going to be here, your high is here, your low is here. We expect the blue line to happen.
Yeah, it's like a standard deviation calculation.
So
right?
it basically takes and it smooths out the ride, which is complete horse hockey.
Yes.
Right? Like nobody gets the smooth ride.
Right.
But how do you create that in your plan? How do you take out that volatility? How do you think about it differently? And that's our journey. But like, I didn't want to get into financial planning. I wanted to really talk about money and money isn't and what money is not. And, you know, we're here. We've built the firm over time. It was me, you, and my father. And now it's, you know, your son, my sons, my 3 sons. There was a show, right?
There was my 3 sons.
So we've grown a lot.
Yeah.
But I don't think we've hit any of our potential.
I would agree.
As a firm. And that's one of the reasons that...
People might see that as a negative, but I don't think...
Oh, I know. Gee, you're trying to do this and you didn't do it. Well, maybe you were just stubborn. Maybe you had some bad thinking. Maybe you had some
Yeah.
limiting beliefs about who you are and what you could do.
I would say this, though. I think, John and I see a lot of other advisors. We travel to conferences. You see other shops, this and that. You hear about them, and I don't know if everybody has pushed as hard as we have.
Right.
And sometimes we're going to take 3 steps ahead, and sometimes we take 2 steps back, but we're still pushing, right?
Yeah, and I think there's something. Like when you think about vision and like where's the firm going, I think we do something unique. I think we get to help people in a way that we were talking about earlier that's different. I think our tools, our messaging, what we do is very, very different. And what we're looking for is a relationship, right? Yeah. And it's not a transaction. It's a long-term relationship. And it's like, what is the vision of how many people we can help, right? My dad and I had this, programming that was going on in our brains, which is like, and that was from him being in the business, which would be, 1970 something that he joined this business. We're well over 50 years as, in the industry.
In that industry model.
And
right.
He's like, we don't want to have a whole bunch of advisors working for us doing a whole bunch of different things. But we never asked, what do we want?
Well, it's right. It's kind of like when you ask people, to tell you a happy time in their life, they usually tell you all the not happy times. It's the same thing.
Well, what would you like? Well, I don't want this. I don't want that. I don't want this. And
it happens when we do our intro call. It's really funny. Like, what do you love about your plan? They tell you what they don't love about their plan.
Which is good because we're going to help you compound those problems we're going to make those problems bigger. No, but it's like you start to think about it differently. You're like, okay, when you understand the other side of that is, well, what is it that you want? Well, we've created this beautiful wealth curve blueprint, this wealth curve simulation tool, the scorecards, the wealth maximization mindset tool. We've created all these wonderful tools to help people empower their wealth. And it's like, well, how many people can we actually help? Right? And I think the vision has always been big, but it's always had a limitation in our cap on it by our thinking. Right? And what I've been trying to do, and you fall back into, and this is the whole thing about goals and driving your future. And in a financial plan, you've got to have goals, right? You've got to have the things that are driving you for that success. Because, a lot of guys get to this point, and I'm 56, you're 60. What do we got? We got 28, 20. We got 2 28s, 3 28s, right? In the firm. That like we got us as advisors, and then we got 28, 27, 26, 24. We got everybody in that zone. Like they're in their 20s. So, there's a deep chasm. And what we're doing is like, okay, what can you do as an advisor? How can you help more people? And like technology, tools, like the vision has become much, much, much greater because the flip of the switch is, well, what is it that we want? Right? And you deploy that same concept into the wealth management, which is, here's what you are right now. And if you continue on this road, is it what you want? No, it's not. I want something more. Well, what is it that you want? Right? So the key is...
And that's the side of the business I was saying before, that it's the behavioral science part of it. Like, as much as we're technicians of being financial planners, that's great. But I think equally as important is really digging in with clients and getting to know what they want and having them understand that the goal is a goal. And I think both of us agree, like, we're not goals-based planners, meaning, okay, you have to save X amount of money to get to this. No, we're going to maximize as much as possible, and we're going to make the plan as efficient as possible, and it is what it is.
And other people are like, okay, you're saving 2%, and you've been doing that for 30 years. When do you want to get the bad news? The bad news is this, you're here. Let's kind of build a bridge between there and now.
And why are we doing that way?
So we can contain or sustain life, because lifestyle, money isn't everything, but, without it, you can't live the way you want to live. in this society. So
Right.
the reality is money is here. Money has to be stored properly. It has to be, available. It has to be liquid. It has to be, it has to be low tax. It has to be, you have to think through all the different strategies. And I think my excitement is, what can we do going forward, and how do we take what we do and keep expanding upon it to reach more people and help more people really achieve the financial success that they're searching for
in an easier fashion.
Quicker, easier, faster.
Yeah,
Quicker, cheaper, better, faster.
I don't think we're slowing down as a society. Like everything is
AI.
Yeah. Oh my gosh. Yeah. Right.
Exponential jumps.
And it's interesting how the uses of it and all that. It's actually truly amazing. We were, I was talking to some of the younger advisors yesterday, and it was people plugging things in there. I'm like, that's a really good idea. Like I gotta widen my mind a little bit here.
Yeah. I think it's, if we're gonna wrap this up,
Yep.
right now, if you had one thing that you wanted to say as we wrap this up, what's the one thing that, as we end this podcast,
In relation, we've talked about a lot of things. So
what's the one thing that you want people to know?
Well, I usually, in a general sense, I'll say this. Usually when somebody sits in front of me for the first time, I just say, you need to have an open mind. Let's start that.
Start with an open mind.
If we're going to work together, I need two things. I need a little bit of your time, but I need you to have an open mind, because I think the marketing and the opinions that people have formed because of the marketing and whatever, or beliefs that they've had because money isn't everything or whatever.
The mental programming.
Exactly. So because we're kind of talking about things in a very unique and probably different fashion than other people, and we know other like-minded individuals, but there's a lot of others that are not like-minded like us, right?
Right.
So you don't know what to bombard. So I need you to have an open mind, and I really, I think some people are afraid to come in and look at their plans
because it's reality.
It is reality, right? And like we used to joke about on the insurance side, nobody wants to talk about death, and stuff like that, but
God forbid.
Right.
It's happening.
God
Question
forbid.
is time, date, location.
But what's the reaction when we actually take care of those areas of the plan? And we've seen these reactions with folks is like they feel better. They feel like, okay, if that unfortunate, catastrophic event happens, we're okay. Mm. And that is, I think, for the people who being in the know versus, just sticking your head in the sand, that's going to come to fruition at some point.
Yeah.
And I just feel like I want to share. I want to share us more. That I guess is really what I'm trying to say. I think I really want to share this information with as many people as I have, as long as I can as I'm on this earth.
So if I want to go back for a second, so having an open mind is a lot like a parachute. It only works if it's open, right?
I think you just stole that from somebody.
I don't know who I stole it from.
Me.
Yeah. JP?
No. From me. You know where I got it from?
No.
My contractor. He saw a whiteboard in my garage and wrote it. The mind is, and I used to have it in my office here because I thought it was beautiful.
Yeah, it's all over the place. It's all over the internet.
Yeah,
it's all over social posts.
Your mind it's like a parachute. It only works when it's open.
It only works when it's
open.
open.
It's an amazing analogy.
Now, Ed has a podcast. It's called Jumping the Wealth Curve, or Jumping the Curve.
No, Jumping the Wealth Curve.
Jumping the Wealth Curve. It's a great visual. You should follow him. You should see what he is doing. You should hit Smallwood Wealth, sign up for a free, no obligation, 30, 40-minute conversation call. We like to call it the Wealth Curve conversation because it's different. It's a different conversation than you have with other people, because most people want to talk about how much money you have to invest right now. We want to talk about you, your family,
Let's get the account.
and the whole thing, and we'll worry about that stuff later. But and join the podcast, subscribe, share, like, and I think from a perspective, the greatest thing that you could do is have an open mind and have a conversation.
Yeah.
Thank you for being on today.
No, thanks for having me. I appreciate it.
Good to see you.
It's good to see you.